The broadcast is now starting. All attendees are in listen-only mode.
Good morning, everybody. Can everybody hear and see me? Get this up. Yes, yes. Excellent. Stan's always the first one we use here. Stan, I missed you last week. Nobody was responding initially. Hope everything is well. Okay, let me get, let me see. View. Hold on. Where it is? Oh, here we go. Attendees. Okay, everybody is good? Oh, vacation. Good. Hope you had a good time. Okay, let's get rolling, folks. Again, we're going to start from the bigger picture and move our way down into the smaller degree picture, one step at a time. So what's the bigger picture? Well, the bigger picture is this. We are getting very, very close to our minimal targets up here, folks. Thanks, Ray. We are getting very, very close to our minimal targets. So, if you read the analysis I posted last night, the breakdown below 29.22 earlier this week has now given us a very clean and clear perspective, finally, about how the market is likely going to develop in the next few months. You're seeing webinar instead of my chart. Can you guys not see my charts? You guys can see my charts? Yes, yes, yes. Charts good, charts good. Can see your charts. Okay, I don't know what happened. Somebody said that can't see my chart. Maybe something on, reboot. Okay, let me get back to this. I just wanted to address that. Okay, so back to this. We are now approaching, you can't either, Hank? Okay, guys, you may want to reboot and try and get back in. And it'll be recorded. So as I was saying, right now we are coming very, very close to our long-term target. That's what the monthly looks like, and that's what the daily looks like. Nothing really has changed for quite some time in our perspective. So, we're now getting quite close to the minimal target we expect to see. The question is, what the heck is this? What the heck is this? And the market has still, amazingly, it has still not resolved that. Let's go down into the smaller degree structures, and you'll see how the market's going to resolve that. When we were talking last week, I was posting this and I was discussing this last week on the site. And my problem was, and we discussed it in our daily live videos when I went through it, my problem is the microstructure did not line up with the bigger rally to 32.25. It was this structure right here that really, if this was the 1-2, the structure up did not line up with a standard third wave, unless we were going to see really large extensions of the third wave. Now, it's possible that could have happened, and we see that sometimes. But again, when the substructures are not lining up within the larger structure, everything has to line up to really give you a very high probability count. And when that substructure was not lining up, and that's why I kept warning last week. It just doesn't seem right. Again, as long as 29.22 held, you had to respect the bull market. When 29.22 broke, there was nothing much left to respect, and now the bigger structure is going to have to develop in line with the smaller structure. In other words, the smaller structure has to fit into the bigger structure, and now with a drop down to 28.80, we can have that line up. Let me explain why on the smaller degree. Okay. As you can see, that means that this larger, first, hold on, you know what? Let me go back. Let me go back to the 60-minute. Okay. I want to show you this. we started off with a 1-2, 1-2 off the lows. The question is, was it a 1-2 as a diagonal, or a 1-2 as a leading, within a bigger ending diagonal, or a 1-2 as a leading diagonal? And it all depends on where wave 4 ended. If wave 4 ended here as a triangle, then we're in a big ending diagonal. If wave 4 ended here, then this was a leading diagonal. And as I've said all year long, the problem we've been dealing with is the overlap and the lack of clarity that has developed because of the overlap on the bigger structures to which of these two structures is going to have us topping out. The overlap is what's caused these issues. If we had a very solid impulsive structure off that low, or if we had a clean end to the fourth wave, there would be no issues. We didn't have either of them. So now we're still struggling with, well, how is the market going to top? Is it going to top in the green ending diagonal, or is it going to take us all the way up to 32.22 in a standard impulse? We're now at a point where we've run out of room, and the market is absolutely now going to have to make a decision. There's nothing left. We have enough 1-2s, 1-2s, 1-2s in place. The market now has to make a decision. When we completed this 1-2 of this wave 3, the following one went all the way to the 764 extension. That is ordinarily a very, very bullish indication. Remember, standards say that wave 1 of a wave 3 will target the 382 to 618, with the 618 being what I'd like to see for a very strong third wave setup. This one hit the 764 extension. It does that a minority of times, but if this is a third wave, then it absolutely is a very strong indication of a very strong third wave about to take hold. Again, assuming it's a third wave. Now, when this 1-2 completed, you then had another, you had to look for another 1-2 structure before we begin 3 of 3 of 3 of 3. That was what I wanted to see. And a 1 here just did not align or make sense. A 1 here made much more sense. Why? Well, let me go into the micro count to show you. This wave 1 exceeded the 618 ever so slightly, and then it came back down ever so slightly. So you know what? It exceeded it a little bit. It could have meant we have already started in the major move higher, but the break of 29.22 suggested that's not the case. So then we are now getting a bigger pullback. Ideally, if the market can pull back to 28.80, we have gorgeous confluence right here at 3005. Why is that the case? Well, on the larger 1-2, this 1-2 here, and this one, remember, hit the 764 of the higher degree extensions, which made it very bullish. Wave 3 of this degree, 1, 2, and then now you're in 1-2 of this wave 3. This wave 3 should be targeting at least the 1618 extension of this 1-2. But the wave 3 of this should target the 1236. Now, the 1236 of that 1-2 is right there, 3005. And within the next smaller degree, this 1-2, if it ends at 2880, targets the wave 3 of 3 at 3005, because 1-2 gives you a 1618 at the exact same point. That is the type of confluence I love seeing. And it gives me a very good perspective on the market. What that tells me is that if the market holds 2880, I'm looking for 3005 in the very bullish sense. If anything deviates from that, that tells me something else is playing out. What is that something else? This. So let's go back to the 60-minute chart. So here, I'm looking for a drop back to 2880, ideally. If we hold 2880, maybe even holds a little more, your next resistance is going to be 2956 to 2980. So somewhere in there. Anywhere in here, we can top out for wave 3. If we're going to take out that resistance and go straight to 3005, that's going to be the more appropriate bullish structure. Again, let me show you on the 5-minute. Should we hold here? Your 618 extension for the next one is going to be in here. You're going to get a pullback, and then you're going to take it out and run hard. Once you take out the high that we struck here, we should not be getting back down below 29.30. So if we are to rally up to here, and then we break down below 29.30, folks, that confirms we are in the ending diagonal rather than the bigger extension to 32.25. This region right here is going to decide whether we're going to be completing somewhere around the 3,000 to 3,050 region for this fifth wave, or if we're going to hit our higher 32.25 target. It really has come down to that already. We're now dealing with this region right here is going to decide how high we're going to go. It's this region right here. This is going to tell the story, and as you can see, it's going to happen over the next couple weeks. That's how I see it. Garrett's been tracking the ending diagonal structure, which still needs a fourth wave and a fifth wave higher, ideally. I would not necessarily be trading for this aggressively, just so you know. But that's really, I mean, I'm looking to take risk off on that, or a breakdown below 27.75. So that's really where we stand right now. The question right now is going to be 28.80, and below that, 27.75. Those are the major supports in the market right now. Below 28.80, folks, you got to start worrying about topping out much lower than 32.25. Okay, that's what the daily shows. Are we going to hit here, or are we going to push all the way up to here? That's really what this region that we're in right now is going to decide. Okay, is that clear to everybody? Because that really is the crux of the analysis I was putting out over the weekend, as well as what I did last night. It's this region right here that is going to tell the story for the next several months. It's going to tell us, can we hit 32.25, or are we going to top out lower than that? Okay, we clear? Good. Let's move on to metals. This was the big issue I wanted to make sure everybody was clear about this morning. Metals are just so damn ugly. We had a gorgeous potential setup for the GDX to bottom, and what has it done? It is now moved into GORP status. In other words, it really is not giving you much in the way of. And can you now count this as a leading diagonal for this move up? Yeah, you can. You can. But the fact that the third wave did not continue strongly after turning down and holding below this 1.0 extension off the lows, I think, to me, it really is much more suggestive of this being a corrective rally than anything else. And that's really going, I'm moving into that perspective as each day goes by now. Okay? That's on the GDX. GLD, there really is no difference in my expectation. My question is, my question has been this whole time, can we get that deeper B wave, which would really fit the pattern so much nicer? I'd like to see a little deeper of a B wave, unless this entire B wave is going to turn into a triangle. I really would prefer a B wave taking us down. The ideal target was 111, because that had a perfect confluence with 116, 116.20 to 30 region, and as I've mentioned before, that 116.30 region was exactly where the 1.0 extension to the downside in this structure resides. See that? So a drop to 111 would be a perfect setup for the rally to 116.28 or so. So that's what I'm watching right now. That setup would be perfect. The market doesn't always give us perfect setups, but I will tell you, that setup would be perfect. To drop to 111 and then up to 116.30 or so. which means 111 should be holding if we're going to get a much bigger fourth wave. As far as the ABX, I said I'm reserving my rights on the ABX. I did not want to pronounce the ABX as bearish yet. The main as needing a lower low. I didn't want to pronounce that. Why? Well, look at that downside pattern. That downside pattern there is really fully cooked. And on the daily, I mean, everything is really fully cooked. Could this still be a fourth wave in this last move and we get another lower low? You know the answer to that. You know the answer to that. But the downside is fully cooked. Can we get a lower low? We certainly can in another extension. But the downside has a fully completed pattern. What do you need after you have a fully completed pattern? Well, you need a larger degree 5-wave structure off that low to tell you that the pattern, to confirm that that pattern has completed. We don't have that yet. We're still looking for that larger degree. Off the, you get the first 5-wave structure, that's great. It's the next larger degree. It's the second degree 5-wave structure that we track that we really need to see confirmation that the bottom is in. We're not there yet. Okay, right now, if we hold over 11, we have that potential. And that potential should take us over 13 in that bigger degree. In other words, back up where the wave 2 is. Okay? And then silver, well, silver, as it's been moving over the last few days, unfortunately and fortunately, however you want to view it, is there a leading diagonal in here, or is this a corrective structure? That's a problem. I don't rely on leading diagonals, but I can't say it's not impossible. It is definitely within the possibility now that we have this further structure developed over the last few days. My main perspective is same as silver, and right now the same as the GDX. I think it's going to have to prove itself that it's not. I think everything is in a prove it situation. For now, my primary is that I think they all get one more lower low. But we have very strong parameters as to what we're looking for. So that's the metals in a nutshell. And let me just take a quick peek at NEM. Yeah, absolutely nothing different here for me. And that is a gorgeous bottoming setup. Nothing is different for me here. I still think you're going to get a lower low on NEM. Outside shot of even 2 lower lows. I mean, there's an outside shot, we get a 22 handle. But right now, that 26 to 29 is looking really good. Okay? Dollar. Pretty much following what it should be doing here. I did not want to see it getting past this 764 extension off the high. And a couple people I remember that day asked me, well, are we going lower? I said, no, 93.80 should hold if the pattern's going to play out. 93.80 held to the penny, as you can see, several times. And now I think we're hopefully setting up for that C wave higher. Now, in this structure, if this structure holds, then you're looking at a large decline pointing down to maybe the 90-91 region minimally. That's really what I would like to see, minimally. I'll track it. I'll continue tracking it as we drop. What we want to see now is another 1-2 structure to the downside, and then a break of this low, and that's going to open that trapdoor for a large decline. So the 1-2 structure is starting to form. So this is something we're going to have to watch very carefully. Lastly, the USO, which I absolutely hate. Why? Because the USO has continued higher in a very, very overlapping structure, which is why I said, yeah, you know what? We still can get all the way up to the 17 region, but it's not something I personally want to touch because the structure of it is not clear or clean to me. I'm staying away from trading this chart until there's actually something clean to play with. And there really has not been. It had an opportunity, but it has not done what it should be doing to give you a clean shot at a clear impulsive structure to trade. So when that happens, I stay away from it. Any questions right now? My pleasure, Robert. Any questions, ladies and gentlemen? Trading day starts in about 5 minutes. Are there any final questions before? Again, I think what you want to do is focus on the 5-minute chart on the SPX. Holding here and going up one more time is, to me, I think that's more indicative of the ending diagonal scenario. Dropping down below 2,900 is really what you want to see for the bigger impulsive structure higher. You really want to see us getting below 2,900 in this ABC pullback. Again, that ABC pullback can also be a fourth wave like Garrett was showing. Remember that. The question is going to be how we develop on this next rally. And then once we hit 29.56, folks, 29.30 becomes very, very, very important support. That'll tell you whether or not we're going to continue to 3,005 and then ultimately to 32.25 or not. And we will continue modifying and moving that support up because of our concern about this potential ending diagonal up here. Okay? Have a great day, folks. I'll catch you later, and I'll catch you in our trading rooms too. Take it easy.